What's going on, guys? So I'm back again with another trading video. Thank you guys for watching. I don't know if you guys saw my Instagram. I need to start off by telling you I love you. So I just love all of you. And, you guys can't ever say that nobody loves you because Josh Answers loves you. So, yeah, let me know if you guys have questions on this video. And even then, moving forward, I'm going to be analyzing, we're going to talk about trading during volatility and is it a good idea to buy calls when there's these dips? Yesterday was a 300 or 300 to 500 point down day. Today only closed up about 30 points, and I'm referencing the Dow Jones. But you know, I'm going to be using a company I think a lot of you guys know, Micron MU. But if you want to, I think to give me some more video ideas, give you guys some insights. If you guys want me to look at a specific company, comment it below. Let me know what options specifically too. We could go through the option chain. And I think that's where you guys are going to get value, is kind of seeing how we're going about options and understanding it. And that's why I wanted to make this. And I will say this is going to start off with, I'm sure it's helpful if you're trading, but if you guys seen any of my videos, I strongly, strongly encourage you guys start off paper trading until you know what you're doing. Options are extremely risky. I think it's just like trading Bitcoin or crypto. It's if not more risky, and the competition is insane. And you guys are going against guys on Wall Street. You're going against market makers, computers, algorithms. So I would say use what I'm telling you now to put it into a paper trade until you get the hang of it and start practicing it on paper trades and see what you're getting out of it and how it works. So let's talk about, is it a good idea to buy after these dips, or what do you do during volatility? I think we'll start there. When you get one of these 400 or 500 point down days, let's take a look at the market here. What's going to happen? Look at this. It's been let me pull up we'll pull up the 2-day chart, the 1 day. So you see, I think that doesn't even give you guys, let me go back to the yearly chart so you could kind of see it on a candle basis. Market's been going down. Now these big drops, and then it comes up here. It's saying now, what do you do? How do you react? And now this is important because, again, I had that other conversation with my boy Evan, and what he was saying was he was asking me, he's like, well, do I buy the options here now? Do I just buy calls? Are they going to be cheap? That's not necessarily true. And if any of you guys have experience with options or just got into it, you'll notice this is where options gets, I think it's funny because you could be right and still lose money. And that is because options has one element that is unique. It's timing. You're playing against time. That's why time, the date of the contract, everything is so important versus what actually is occurring. You could be right, but you have to have your timing properly. And now the main thing, this is what I'm going to say, I guess to even give you guys the answers. Is it a good idea to buy calls, when it drops? Well, the answer is economics. It depends, but I say most likely no, because when it's dropped, you guys think, okay, well, hey, put premiums skyrocketing, the market's going down, puts are getting expensive. That means, therefore, this is the logical fallacy people make, is that they say, well, therefore, if puts are cheap, puts are expensive, calls must be cheap. That's not the case. And that's because, think about it, you guys, you don't have to be a genius or have any stock market experience or minimal experience to come up to that conclusion. And the market makers think the exact same thing, and there's other people. There's two things you got to factor in. It's the demand, how many people are purchasing an option, how many people are bidding on it, and then also what the market makers expect. They want, they're always willing to fill an order. They're always willing to sell a contract. They have excess contracts from other transactions. They're trying to balance their books. So they want to protect themselves. So when the stock market drops 400, 500 points, are calls cheap? Yes. They become cheaper, but based on now the spreads during those volatile, we won't see those spreads when we come here. You're not going to see it when you come here. Now, this is a tight spread on MU, 2 cents, but that's still a big percentage difference if you think about it with how cheap it costs. But what's happening is that they'll widen the spreads, but pretty much they're going to make a low bid and a higher ask. They're going to make it more expensive because they're anticipating the same thing. They're going to say, well, yeah, it's a down day, but we're going to still not make the calls too cheap because if it bounces back up, like you've seen many times, this buy the dip mentality, it works. And like if you're buying stocks, that's a different story. But even then, you could still take some of the underlying logic here. It's not always going to be the best move. And I'll show you guys, and this is what I encourage you to look at. Look at the options chain, study it. That's why I recommend paper trading so hardcore, so that you guys understand how it works and can monitor it without putting your money on the line and being confused why you lost. Understand it, and then you're going to be able to profit. But the big important part that comes from here is that during these volatilities, like I said, the market makers are expecting it. They're going to widen the spreads. They're not going to make it too cheap. The day you want to buy the calls, let's say after a down day, and that's obviously, hopefully you guys understand the context, is a day like today. Because I even explained this. I could even probably pull up the recording I had when I was talking with my buddy. And I was even saying, yeah, watch after 400 or 500 point down days. The market did fluctuate today. It went down a little bit, but it gapped up a little, went higher, then it kind of closed down even. And that brings up the whole scenario is that this is the day you want, because now a day has gone by. That messes up timing and it brings more stability. Now the market makers aren't expecting another 500 point down day or even the risk of a 500, it's at least slowing down. They're going to, depress some of that volatility, the implied volatility on those contracts. They're going to start making it cheaper now. This is where you could start to make your pickups. It doesn't mean it's good, because again, you still have yesterday in the rearview mirror. But now let's say tomorrow, Wednesday, comes up and it's fairly chill, then that's going to bring a different story to the picture, because now that's going to be the opportunity to get your calls. But if not, I would start scaling in right here today. But again, you never know. That's the thing, because I'm still looking at other factors with the market and what I think is going to happen. But I'm using today as a general example. So hopefully you guys are with me and don't get ahead of yourself. But it's days like this. And now let's go to the option chain so we could see what I'm talking about, because even though yesterday the market dropped a lot and today went up, you're like, okay, the market went up, calls should have been cheap yesterday. That's not necessarily the case. I'm obviously looking at the weekly. We could even go to the monthlies, but even then, what you're looking at here, the 50, pretty much only 3 of these contracts went up in value. These other calls, even though the stock market went up, they were down 3 cents from yesterday. So you could have bought them here near this is where they were at open, 50 cents. They're down 50% from the close because the market went up. And this is where they get you guys. This is where the market makers get you. This is where people are able to profit off of you if you don't know what you're doing. And, even though the contracts were at 75 cents a dollar, yeah, they're cheaper, but it's now, remember, time. And these are weekly. So granted that, but take a look even to the Julys. Same situation here. These are more expensive contracts, but they only went up. And this is what I like to look at here, the 15%. But sorry about that. It's so if you take the like I was saying, these contracts, you could see the percentage difference. Yeah, they move 15%, but that's only if you really got them. You got to look at when you purchased it, how they opened. They fluctuate a lot. And then that's the thing too. I will say, you guys, if you've seen my trades, you've seen some of my videos, you've seen what I post on my Instagram, I'm not going for 15% on my money. I'm using smaller amounts with options. I'm looking for bigger gains, pure speculation by definition. My 10-15% gains, I'm coming from holding stocks. I'm doing that in real estate off of very large amounts. But with small amounts, with that risk I'm taking, I want bigger return. So even these cheap contracts you could buy, again, they only went up 12%. I'm not going to risk and that's why I say, going for a 10-20% gain on a small amount of money or even a big amount of money with options, it's not worth it for me when you have the ability to lose 50%, and as we see, because again, you see what one day did to these options. They were going at $1.10, $1.20, down to 70 cents. That's a big difference. So make sure you guys are in line with all of that and understand that. But as you see, these options didn't go up as much. And as you start going down the chain, now some of these options may be unrealistic. You definitely have time. You still see a lot of activity. But at the end of the day, these aren't going to be, this is the day you want to buy, where now a day has gone, they got killed in premium the first day. Next day comes by, they've only gone up 1-2 cents, lost a few cents. that means you're seeing that implied volatility come down. You're seeing that premium drop. This is going to be your opportunity. And again, even if you could wait another, and be careful, because again, this, what I'm saying is wrong in the sense of, if a few more days go by, nothing happens, you could still get crushed. If that's the thing, it's all about the timing. But and that's where you want to swoop in to get it, is when the market's kind of calm, or when the market's not expecting it, or after you see premium get crushed more than one day, and watch the spreads. But even just looking, this is what I advise you to do. If I have a tutorial through my videos. If you go through Thinkorswim, you could go see how to set this up on Thinkorswim. On E-Trade, you just create a link here, and I'll make a video, and but analyzing the option. I like to have a visual analysis on candlesticks to see how the prices have gone over time. So that is what you want to look for, to make sure that it's not going to, to see where you're actually getting at. And even looking out through this day, these options, you bought them yesterday at the very lowest price. You're making what? 2 cents, 3 cents. It's just not worth it. Even if you go up to the ones here, more closer to the money. Again, even if you bought them at the lowest point, $1.25, you would have made 25 bucks off of every 125 bucks. I'm just not in that game. I suggest you would. That's not the power options provides. That's not what I would even recommend. You guys are here trying to make a lot of money and get those good opportunities. Don't always swing for home runs, but again, make sure your risk reward and your motivation is there. It's just not there, and that's just through looking at the options. So hopefully you guys see, is it a good idea to buy the calls after a dip? Yes and no, it depends, but usually not. It's all about understanding the price of the option. So I'll go in more in depth with this in videos. Give me some feedback. Let me know what you guys are looking for. Give me some companies. Give me some scenarios and what you think. But this should be a good, solid footing for you guys to be grounded on in moving forward and being cautious. Again, my biggest thing, although I said it's pure speculation, I'm trying to make a lot of money, I'm using little bit amounts of money. The main thing I'm going after, though, at the end of the day, is safety. That's why I say, be careful, make sure you paper trade. Don't throw a couple grand into an option that, the floor could be swiped up from under you. And even then, as you see, what this whole example is showing, even if you're right, even if it's a big down day and you buy options, you go throw 500 bucks after, oh yeah, they're cheap, you could still lose money. And it's just not worth the risk. Know what you're doing. Start, we'll talk about scaling in. I think I have a video on that. So definitely look on that. We'll go over that again, but make sure you guys have a strategy with that, and patience. And then back to the last video, control your emotions. Don't get too excited. Don't get too jumpy. Don't get fear of missing out, FOMO, and don't like, oh no, it's going to go up, or what if it bounces? Who cares if it bounces? Because the whole, how I make money, if when the opportunity comes to me and I know it's truly cheap, and I'm able to secure the contract at a good price with a good opportunity on a good company under good logic, both fundamental and with news. Even, I don't do technicals. I don't recommend it either. Then you'll see the opportunities come, and that's how you make money. But you need to have control of your emotions. You need to be patient, and you see how far understanding goes. Don't just buy. If you're using, I guess, level 1 thinking, level 2 thinking, it could get you somewhere. But the more you think about it, the more effort you put into this and understanding the function of these options, how they work, how it comes into play with time. That is going to take you a long way, and ultimately is going to protect your money. So hope you guys like that. Hopefully you learned something. Let me know even what you learned. Let me know what was confusing, and give me some companies to go over with you guys. I truly love doing this, and I love it. And like I said, I love all of you. You're loved. Make sure you guys subscribe. Give me a like on the video. Give me a comment. Stay in touch with me. Reach out to me. And that's it. And I will say, too, if you go check out the other videos, I am going to have a webinar. It's not going to be on stocks. It's going to be on real estate. Shoot me a message if you guys, or shoot me an email if you want to come to that webinar. We already have like 130, 140 people ready to go. So it's going to be on Friday. I love y'all. Stay in school.